Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodPartners.com. Welcome back to the show, Hilliard.
Nice to be back.
Hilliard, Bloomberg News says Canada is the second most likely nation to see a real estate crash. They didn't use those words you say, but you're going to say it. Tell us about it.
So just to go back to my book came out in 2015, so 6 years ago, and I did try to get an interview with Bloomberg at the time, but Bloomberg being arguably the top news organization in the finance world, at least among stock traders and that sort of thing. And they've been pretty positive on real estate all the way through. So this is a big change that they're coming out and pointing out three countries, New Zealand, Canada, and Sweden, as what they call the frothiest housing markets. And they say that the real estate prices have gone up so fast that it's flashing the kind of bubble warnings that haven't been seen since the run-up to the 2008 financial crisis. So, and one of the things that always struck me about it is that Michael Bloomberg is renowned for liking real estate. He owns a $20 million flat in London, England, for example. So maybe that's why they're reluctant to print these. But anyway, they've gotten over their reluctance. They did give me an interview in 2018, I think it was, 2017. In New York. I happened to be in New York, and they agreed to interview me about my thesis, but they were skeptical, as I recall. And if people go on my website, they can see I've got the interview posted there. But getting back to present day, so they've come around from being very skeptical about this housing bubble risk into now claiming that it's a very dangerous situation. So, and the factors that they use are things like price-to-rent ratio, price-to-income ratio, real price growth percent, nominal price growth percent, and annual credit growth. And they rank New Zealand as the worst, in Canada the second worst, and Sweden as the third worst. But and then Norway's the fourth. So the difference with those countries, though, is New Zealand, Sweden, and Norway are all pretty small. Like New Zealand is 5 million, Norway's like 4 million people. Sweden might be a little bit bigger at 10 million. So of those four, only Canada at 38 million is a relatively large country. And one of the things they highlight is annual credit growth. So Canada is 9.3% annual credit growth. And that's always been my thesis, that the rapid growth in debt, so they use the word credit, but actually what they mean is debt, is the biggest risk to the housing market, and that's what will cause the crash. And of course, Bloomberg doesn't use the word crash, but that's okay. That's to be expected.
Well, what does that mean to the average Canadian homeowner?
Well, so the homeowner is, of course, enjoying this so-called increase in wealth, and of course, people have to realize, I think, that an individual can gain wealth from their real estate holdings, their house, because they could sell the house. And that's the only way they can turn it into wealth, is by selling the house and moving into something that costs less and then generating the wealth that way. But as long as they don't sell the house and they're living in it, they're basically consuming the wealth as consumption because they're enjoying the lifestyle of being in a very valuable house. But society as a whole, if you take all of the houses, so there's about 9 million houses in Canada that are owned, and then another, say, 4 million that are rented. So that focusing on the 9 million that are owned, the value has gone up a lot, especially in the last year. It's 20% or something like that. So that's a tremendous amount of increase in valuation, but it's not wealth because overall the society, the total people in Canada have borrowed an equivalent amount. So the growth in credit or debt and the increase in the value of the housing is roughly equal over the last 10 years. So it's basically all we've done is we've all just sat down and said, well, let's all go borrow a bunch of money at the bank and then go and bid on each other's houses to drive the prices up, and then we'll feel wealthy, right? But it's not true wealth. And of course, the way to test it would be, okay, imagine if those 9 million, imagine if just 1 million of them, so 11% of them, decided tomorrow they're all going to cash in on their wealth. Well, there's no way that there would be buyers for even a fraction of those 1 million homes at the current prices. So it's essentially similar to a Ponzi scheme where the only way it keeps going up is because more and more money, and in this case is debt, gets pushed into the funnel so that the prices can keep rising. People are bidding against each other to create wealth, but it isn't really wealth.
Is the Canadian real estate boom continuing, or is it slowing down or coming to a stop? What's its situation right now?
You know, it's hard to tell. There's so much. So one of the reasons it's very hard to tell is that there's apparently there's very few listings. So the few listings that there are, or at least there have been up until June. So starting in March, April, May, usually every year there's a bunch of new listings that come on the market, and you get a bunch of sales, and then you can tell what's going on. But this year has been different in the sense that they just don't have the listings. So the few people a lot of them are speculators that are bidding on these places are getting into bidding wars and putting the prices way up. But it's a small number of sellers that are taking advantage. I don't know. The rest of them are probably thinking, well, maybe if I wait a year, I'll get an even higher price. But at any rate, it's very difficult to tell because it's not a normal market. And the Globe and Mail had a story this morning actually that said that 1/5 of all the buyers out there are what they call investors, what I would call speculators. So it's not a very representative market of people. And of course, people don't know if they want to live. Do they want to work from home, or do they want to go back to work in the downtown office towers? It's really hard to know. So anecdotally, now this is only Edmonton, but I have seen in the last week some houses. There's been a lot of expensive houses that have just sat on the market. Some of them are starting to sell, but there's been quite a few price reductions just in the last 5 days. For people that are watching closely to see it, I know a few of those people like that. They tell me there's been quite a few price reductions, and that's anecdotal. It doesn't really mean anything until you see a broader trend. But one sort of medium-term threat to the housing bubble is the fact that, at least in Alberta, there are now no longer an increase of 2% per year, greater than 2% per year, people moving to Alberta. In fact, more people left Alberta in the last few months than arrived in Alberta. So we've been used to, in Alberta, we've been used to 2.5%, almost 3% every year of new people coming, and that, of course, that creates a demand for housing. But if they start leaving, well, then that's pretty scary.
Calgary has something like a 20% office tower vacancy rate, and is it true they're now converting some of those office towers to residential?
Well, there's always talk about that, and it sort of sounds good, but then I did investigate it a little bit. I didn't put it in the book, but it turns out that it doesn't work very well because the office towers are constructed differently from residential towers. So, you think about, if you've ever seen an office, the floor in an office tower, they can give you a clean floor with no walls, no barriers at all. And you can demise it however you want. You can organize it, hire a designer, and figure it all out. So it's a completely different style of construction from the. So and there's going to be a surplus of housing in Calgary anyway. So it would just be adding to a surplus. And generally, because unlike Vancouver and Toronto, in Calgary, it's very easy to expand in every direction. So if people want single-family homes on their own little plot of land, the Calgary real estate developers can and Edmonton as well, they can provide it. And the traffic isn't that bad. So really, it's not likely that those office towers can be converted profitably to housing. I don't know what's going to happen to them. And the actual vacancy rate is actually quite a bit higher than the stated rate, because I know there's lots and lots of people that have got themselves into long-term leases that aren't using all the space. So if they've reduced their employees, from 180 down to 45, but they signed a lease a couple of years ago, they've got all this. They've got like 75% of their space is not needed anymore, but it shows as fully leased. So if you actually included all of that into the numbers, it would be even higher than the stated number. And we don't know. Like the only way that that could get fixed would be for a bunch of companies to move to Calgary, which I promote every time. Every time I talk to somebody in Toronto at the head office, I say, "Why don't you move your head office to Calgary? It'll be cheaper, and you can get all this. Basically, you get the space for free. All you have to do is pay the operating costs, and the housing is cheaper. The mountains are close, and but they just look at you kind of like, are you crazy? Why would I move? They're not even sure where Calgary is. They're probably not going to move to Calgary."
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, oil prices have bounced back nicely. Is that improving Alberta's economy?
Well, it probably is helping quite a bit. The cash flow going through, so that it was devastating to the Alberta economy. The drop starting in 2014, 2015, and several of the big companies like Cenovus and Canadian Natural Resources, it's actually done pretty well, but Suncor, their stock prices have not recovered. They're not even close to recovering, but now they're getting a bit of a boost, so it's pretty positive. But I don't think the employment has come back, and certainly the prospects longer term are probably not that great for the sector. Although I'm probably alone in that view. I think most people in Alberta believe that Suncor is the biggest company. They bought Petro-Canada, for people that remember that kind of stuff, and their stock went down to below $20 in the big drop, I think, last year. It peaked at $60 probably in 2008, I think, roughly, and it's now at $30. So, the stock market in general has gone up a lot since then. So the rebound has been pretty good, but not that exciting really compared to the rest of the market. But they've got the problem of, they've got several problems. They've got the problem of Alberta is the biggest exporter of oil to the U.S., far bigger than Saudi Arabia. And it never gets mentioned, but it's far bigger than any of those other countries. And the U.S. doesn't need as much oil anymore because they're producing more and more oil all the time. That's problem number one. Number two is that they don't have the pipelines to expand their sales to the U.S., so they're using a lot of rail cars instead. And the problem with rail cars is it costs $15 a barrel to ship, up to $15 a barrel to ship oil. It's about $5 a barrel in the pipeline and about $15 on the rail car. The slightly longer term problem, but not that far off, is the strong environmentalist movement, which says we should stop producing fossil fuels altogether. And of course, everybody knows they're not going to stop producing fossil fuels completely. So they'll start cutting back on the fossil fuels that are the most expensive and the most difficult and the most remote in terms of transportation, and unfortunately, northern Alberta's supply is right on the chopping block in terms of expensive and difficult to transport. So there's a lot of problems. So this rally, which was your question, is for real. But if I'm not participating in it at all for obvious reasons, but the people that are, I think they would they should be careful not to get caught in probably a sort of bear market rally trap thing. This is not likely to be long lived.
With the uncertainty then with oil, what's Alberta doing to diversify its economy?
It's very difficult. Like I go back, I actually worked for the Alberta government in the 1970s, and Peter Lougheed was the premier, and we had so much money, unbelievable. We had $3 billion in the Heritage Fund in about 1978 or something like that. And today there's maybe $15 billion in there. So where did all the money go? But at any rate, it's been diversification talk all the way along. For a while, at one point, Alberta bought in airlines. They brought in petrochemical plants. They've done all of these things, but generally it's tended to be related to the oil and gas industry, and it's really hard to get away from it. I think, personally, although I don't think this view is widely shared, that Alberta has a tremendous opportunity in renewable energy, because in southern Alberta, the sun shines a lot. Actually, the sun shines everywhere in Alberta a lot in the winter and in the summer. But in southern Alberta, they've got a special feature, which is the wind. They got a tremendous amount of wind. So, and it blows pretty much all the time. So, but how do you export it? So one of the possibilities would be to use the wind and the solar in southern Alberta to produce hydrogen, which can be stored forever or could be shipped easily to other jurisdictions in things like pipelines and rail cars and that sort of thing. So there is some work on that. There really a couple of big announcements recently about hydrogen in Alberta. And then, of course, there's also carbon capture as well, which is where they capture the carbon and hide it underground. Hopefully that it doesn't leak someday. And but the hardcore environmentalist view on that is just don't produce it in the first place. Don't produce the oil and then capture the carbon, because capturing the carbon is very expensive. Just stop producing it altogether, which would be very negative for Alberta. So far the diversification is they're struggling to find a good diversification. Let's put it that way.
A lot of economists say natural resource Canada doesn't pay enough attention to is education. Is that a concern in Alberta?
Well, I don't know. There's so many people are scrambling so much because things are changing so fast, and we don't know. Like, what are the opportunities? The whole education, especially the post-secondary education world, could be changed with online classes. There's a number of the top professors in the world that are providing online courses that you can take. You don't have to pay the huge tuitions to go and attend Harvard or Yale. You can actually take the classes of the top professors in the world. I mean, they're not necessarily at Harvard and Yale, but wherever they are, if you can find out who the top people are, sometimes you can go and take the classes directly from them. And that's going to have a big impact, because if everybody has to physically be in the same location, same building, that's very expensive. But if you can teach to 1,000 people all around the world, and you're the best teacher in the world, you don't have to charge them very much. You could charge them $1 or $2 per hour of teaching, and you'd still be making a very good income. So there's a lot of disruption going on, and how do you guess which way it's going? How do the government track record isn't very good in guessing the future direction of some of these sectors.
Hilliard, is there anything else we should be keeping a close eye on right now?
Well, the Tesla cars. So Tesla had their latest plaid reveal it. They use periodically things where they reveal new projects and stuff. The last one, which was about a month ago, wasn't as exciting as some of the other ones, because all they did was say, we're going to have this new car, which we already have. We're going to give it a new name called Plaid, which some people will know comes from the movie Spaceballs. So the one I have is called Ludicrous, and in the movie, the guy says, well, there's no speed faster than Ludicrous except Plaid. So Tesla's, all the names of their cars have come out of, in terms of the speed anyway, have come from the movie. So the last version is Plaid, and they've announced Plaid. And so the specs on Plaid are, there's 3 motors. They don't say how big the battery is. The top speed is 200 miles per hour. The 0 to 100 kilometers from a standing start is 2 seconds. And the quarter mile is 9.3 seconds. And it beats every single other car, whether it be Lamborghini, Ferrari, whatever, in all of those categories. So the one that I had, the Ludicrous one, it was really good in the 0 to 100 category, but it didn't beat the other cars, more expensive cars, obviously, in top speed and quarter mile. But now they've got a new one that does that. So I don't think it'll be a big seller because it's over $100,000 US, but it's basically so Tesla can say they have the fastest production car in the world.
Hilliard, thank you so much for chatting with us.
Nice to be with you.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethmcleodpartners.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.